everyone. Could you please confirm, is my voice audible? All right, so I welcome you all to the day 2 of this Game Changer webinar session. I'm Sanya Asif, and yesterday we had started doing practice of past exam attempt, which is relevant to June 2026 on the practice platform. We did cover major portion of section A, but still some of the requirements related to section A were left. And of course, in today's session, we had planned already to discuss section B. So both of the leftover portion of section A as well as section B will be discussed. So just have a quick overview of what we did last day. I just told you that what is basically the agenda related to this 2 days webinar session. And I just discussed that what are the common mistakes we have seen students doing while attempting their advanced taxation exam, and you are not supposed to repeat these mistakes. These are the common pitfalls which need to be avoided, as in you really try doing practice and practice on the practice platform before appearing in the real exam. And if you will be able to do the practice well, especially taking the mock, then they will be able to complete their entire exam, which is like very much important for the sake of securing good marks. And obviously, the practice could only be done if you have sufficiently covered the course. I should say you really need to cover each and everything related to the course. But yes, in the end, I may say that by the time you get done with the syllabus, you find out that there are certain things in which you have got a good grip, and on the other hand, there are certain things for which you generally have an idea, but more or less things are to be covered, right? And while attempting the exam as in advanced taxation, at majority of the points you will have to write. So when it comes to a totally description based question, then you really need to look at the numbers which are associated with the requirement. So whatever the marks associated with the requirement, you need to try producing that many valid points, right? And when it comes to advanced taxation exams, of course, the professional skills is basically an area where you can grab a lot of score. So you really need to work hard on the presentation skills, on first of all understanding what is being demanded by the examiner, and then projecting and presenting the whole answer accordingly. And then I did discuss that all those students who are going to take up their exam for the second time, or maybe they have taken up their advanced taxation exam multiple times before, they really need to assess that what exactly the problem is. If they had not been able to secure even 45 marks in their last attempts, then that would mean that there is like something serious with their conceptual knowledge, which is why they really need to emphasize first on covering the topics, on understanding the topics, and then later on they may do the practice. Okay, now as we started discussing section A question of your past exam attempt, let me just tell you that I do have few more things which I'll be sharing with you people. First of all, I'll be sharing the concise version of the pocket notes with you people. See, we keep on like changing the things with every passing attempt, and especially with every passing financic. So these are the pocket notes which have been adjusted according to the latest standards. So this is something which I'll be discussing with each and every student, whether you are enrolled at WIFI or not. And then I have downloaded a very important document from the website of ACCA Global. And let me just remind you that I'll be unlocking examiner report on 19th of August on ACCA Global, ACCA platform. I'll be sharing the link on my LinkedIn soon. And I would really want you people to join it if you really want to know what your examiner had said about the previous attempt, which is again this June 2026. Okay, so this is like a document which I have downloaded from Study Hub, and It entails all the important areas from Section A questions, which are basically surrounding the ethical concerns. I hope you know that there is a chapter which is called Ethics and the Professional Guidelines, which is there in your syllabus. It's a very small, sweet, short chapter. And on the other hand, it has got a lot of importance. As in, you really need to cover it thoroughly. You really need to have a good practice of it, because it is for sure, it is promised by your examiner that he will be testing a question of worth 5 marks, which would always be examined as a part of your Section A question. So in the past few attempts, whenever in Section A, this ethics question got tested, whenever this got tested in the previous attempts, your examiner has done a marvelous thing, that he has extracted a portion of the question and the related solution, and he made a separate document about it. So in this document, you will find the multiple questions related to ethics which had been tested in the past exam attempts, but it is not actually showing you the whole Section A question. It is not going to give you the entire question or number one picture, rather only the portion of that question which is relevant to ethical concerns, and they are basically giving the suggested response, its solution as well. And then the marking guideline is also provided, so that you may understand that how your examiner is going to test certain things. So this is like going to be a nice thing for preparation purposes. Then what else I have to discuss with you people? I will be giving you this important questions list, which is being developed from the Kaplan revision kit. These are some important questions. You must have to have a good practice of these questions. At least you should be done with the practice of these questions, so that you really feel confident before appearing in the exam, because it's a professional level exam. So your preparation has to be like up to that level. And then I'll be sharing a revision plan with you people as well. Though you people are now this is probably going to be the last ever exam of ACCA for majority of the students, because with this exam, usually people are done with the whole of their professional qualification. So you really know yourself, that how you will be planning your next 10 days, your next 5 days, your next 1 month. But I'll be sharing a strategy related to last 10 days with the people as well. So if you like the strategy, you may apply or you may incorporate in your existing plan as well. But that's like not a hard and fast rule, right? So this is like something which varies from person to person, right? Okay, so with day 2 of this game changer webinar session, let's once again focus on the professional skills, because altogether 20 marks are embedded in your exam which are relevant to professional skills. It's about analysis and evaluation. In both Section A and Section B, you will be given with different strategies, as in how we did discuss one of them in last day's session, where Reggie, a person had to include Sam, his wife, in his business, either as an employee or as a partner. And in both of the cases, we had to determine that what is going to be an impact on the tax implication and NIC implication. What is an overall tax situation in both of the cases? And eventually, how much of the saving will be achieved? So analyzing the two situation, analyzing the two alternates, analyzing the two options, and then eventually evaluating that which one is best out of the two. This is the skill which could be tested either as part A or part B, Section A or Section B of your exam. Then we have commercial acumen skill. Again, it is like going to be tested in both Section A and Section B. It is like all about giving a broad opinion. Think out of the box. This is how you are going to project. This is how you are going to use your commercial acumen skill. As in, if someone says that what is going to be the tax implication, of course, apparently they would mean what is going to be the income tax implication. But then you will be thinking that is that going to have any other implication apart from what is obvious? So if income tax is like an obvious thing, but NIC might be the other thing which an individual has to pay or might not have to pay, for instance. And then maybe the stamp duty, land taxes, or other sort of charges which are not explicitly asked by the examiner, but they come with the package. I mean, they are also something which are important and they are to be taken into account. So this is like when you are going to discuss the other issues apart from what the main issue being asked is, this is how you're using your commercial acumen skill. And of course, within the body of the question, you will find a hint of in what direction you will be utilizing your professional acumen skill, basically, and then being skeptical, being judgmental, being in a position where you are going to challenge the statement already passed by the examiners. For instance, if examiner says that someone is thinking that BADR, the business asset disposal relief, will apply, then you are going to be skeptical. I mean, whether the conditions are being fulfilled. If yes, then this relief is going to be applied, but this relief might be compromised or it is like not fully available if certain important things are missing. So it's like you are going to interact in such a way that you are judging or challenging the existing circumstances. If something is like, if like the information is not completely given, then of course talking about the extra piece of information which is essential in order to execute a certain scenario, these are basically those statements which you pass both at the time of dealing with section A and section B. And this is how you are projecting your uh, projecting your skills, which are basically about being skeptical. And then there is like one more skill, which is about communication skill, the tone, the layout, the format, the way you are presenting your answer. With section B, this skill is not going to be tested because it's always the answer that you are straight away putting in the face in order to address a certain situation. But with section A, yes, they will ask you to make a report or to make a memorandum, and be very careful. There could be a chance that with section A, you will be given with four requirements, requirement A, B, C, and D. And with four requirements, maybe the first two requirements are to be presented by making a memorandum, and maybe the last two requirements are to be projected by via report. So it's like that you really need to be careful that what communication skill or skills are to be presented when it comes to section A, right? So the thing is that these are the skills which for which you really need to be careful, as it is like going to let you grab 20 marks altogether. Your exam is computer-based exam. It's going to be of 3 hours and 15 minutes, that which would mean that technically you will be having approximately 1.95 minutes in order to cater to 1 mark. But let me just tell you that it is not always 3 hours and 15 minutes that you will be spending writing. You will be like spending typing down on your computers. It's like, of course, some of the time will inevitably be used for the sake of planning your question. And see, students, whenever you read a certain requirement, for instance, and it is said that explain which conditions are essential for BADR to apply, let's suppose, and if it is like applicable in this case, it is not like that you just rush into the answer. You will start writing down whatever is like coming to your mind. It's like just understand what they are asking, as how they did ask in yesterday's session. I did discuss a small question, small requirement with you people, where it was said that what is going to be an impact on Reggie's payment on account by involving Sam. So the question in itself is a very comprehensive thing. You had to take time that what is examiner asking. You really need to identify the point that we will be discussing impact on Reggie only. Why? I mean, while considering that Sam is now gonna be a part of his business. So this is how you will have to plan first, and then according to what is being asked, you will be exactly writing it down. By randomly mentioning the whole topic, and after doing that thing, thinking that your examiner will be very happy that you have written down exactly the whole topic, you have gone through your I mean, after going through your notes, is like not sufficient at all. Examiner doesn't want you to cram and reciprocate everything. He doesn't want you to just I mean, being juvenile about this thing, that you are writing down everything from start till end, that you have gone through the notes. No, he would want you to write in exactly the same way he has asked about the question. He doesn't need unnecessary information. So if you're going to pass down the unnecessary information, that is going to be of no use. That is not going to be bringing the marks. So, which is why I just keep on saying that you really need to focus on creating valid points. You really need to make valid points, and see technically, openly, you, from technical perspective, you do not have to solve 100 marks. You have to solve 80 marks, because 20 marks are allocated to professional skills, and for the sake of 80 marks you have got 3 hours and 15 minutes. And while you are writing down the things the way your examiner wants, this is how you will be securing professional marks as well. So you have more than 2 minutes in order to deal with a certain mark. Apparently, it seems very lucrative that you have approximately, let's see, 195 minutes are to be used in order to deal with 80 marks. So that means how many minutes per mark you will be requiring? I shall have to open the calculator, obviously. So it's like 195 divided over 80. It's like approximately you have 2.4 minutes, a little bit more than 2.4 minutes in order to deal with 1 mark. Seems quite leveraging, seems quite fancy. It seems as if things are manageable, but they are manageable if only you are done with the practice in an appropriate manner. Otherwise, 2.4 minute is not something big. And of course, not just you would have been done with the practice well. Uh, Once you receive your exam, then you will be like planning at every point when you start typing down, right? So before that, you start writing down about the solution, you really need to have a clear-cut plan that what you exactly want to write. And in the last session, and frankly, with all those students who have been a part of my regular batch, I keep on saying this thing, that whenever you are going to present your answer, please make a habit of making headings or subheadings. And then whenever the calculation is required and you're going to be doing the calculation on the spreadsheet, then clear labeling of the answer is an utmost requirement. Your examiner does want to see this thing. Otherwise, if you're not going to provide an ease to your examiner, if you're not going to put anyone at ease, they won't be putting you like at ease as well. So just to give them ease, in response you will get an ease as well. He will get relaxed, he will sense as if you know a lot of things, you have got good presentation skills, and that's how you will be able to grab good marks, right? Okay, so this is something which I'll be obviously sharing in the form of an extra document with you people. The tips are being discussed. I did discuss with you people last day, and I'll be obviously sharing few more tips with you people. Okay, so this is basically the contact number of your support team. Majority of you already know that. I'm so sorry. How and when they will have to use this support team number. I did share my personal number with you people as well. And now I am going to take you people to the practice platform once again. Just give me a moment. And before that, we start with June 2026 exam. If there is like anything else you want to ask me, please ask by dropping your concerns in the dialog box. If there is anything else you need to ask me, please drop your concerns in the dialog box. Meanwhile, I am opening your practice platform. All right. So I told you people that out of all the exhibits that are provided to you people in your section A, the last exhibit will be showing the requirements. So I'm going to open it up. Yesterday we did discuss till requirement B. Now we will have to deal with promising with a like thing which is like promising uh, for the students, and this is like what the ethical concerns that you need to lay out with respect to any information that is being covered in the question. It's requirement C. Requirement C1 says that we need to make a memorandum on the proposed client Topple Limited and its corporation tax matters, for which Exhibit 3 is important. And see, despite the fact that you people had gone through all the exhibits before, but now I will open Exhibit 3 once again so that you may quickly go through the entire information, but in relation to this exhibit only, because this is the best part with Section A, that you won't have to keep on like searching for a certain situation or the figure, because the examiner has identified that in which exhibit you will be able to find out the required scenario, the required material. Okay, so here we'll be making a memorandum. So again, this time I'll be making a memorandum once again, but this time the client is no longer, I think the previously the client was Sylvie, right? And in this case, it is Topal Limited, and we need to prepare an internal memorandum for me before I respond to Lee covering the matters below. So the first thing is about the fundamental principles. Before our team agrees to act for Topal Limited, we should consider the ACCA fundamental principles of ethics, and we need to explain any difficulties which we may have complying with ACCA fundamental principles of ethics in relation to acting for Topal Limited. So once again, before doing anything, you need to focus on the verb. Here we will be explaining the things, and that is it. So for the sake of doing any question which is description based, which is narrative based, the narrative is to be crafted on Word document, right? So I am going to open the Word document, and of course, I will not forget making the headings. And whenever, wherever required, I'll be producing the subheadings as well. But what they are exactly asking. See, we are going to agree to act for Topal Limited. And here we, the team of tax advisors, need to consider the fundamental rules relevant to ethics. And here we need to address not everything that you have read in the chapter of ethics, but the difficulties which we may have complying with ACCA fundamental principles of ethics in relation to acting for this company. I'm going to open Exhibit 3, in which the relevant information can be found. I mean, what could create a problem, and obviously, the rest of the requirements are also related to this part of the question. So kindly have a look at this part of the question, the Exhibit 3 once again. I've scrolled up the screen to show you the next portion of this question. In fact, precisely the next exhibit. This is the very last lines of this question. I hope you people must have gone through this exhibit entirely by now. Okay, so the thing is, as what I've told you people before, that This time, again, we are going to make the memorandum. Let me just show you the answer that we drafted yesterday. Even in the last session, I mean, yesterday, we did make a memorandum, but that was being made for our client Sylvie, who is the shareholder of Topal Limited. And as what I said, that whenever it is possible for me, I'm going to copy, I'll be like carrying out this activity of copy paste just to save my time. So I'm just going to save the memorandum, sorry, copy the memorandum. I am going to go forward and now I'm just going to paste it over here. And this is all about requirement C, where this memorandum has to be made. And this is once again for memorandum, it is about client files. Our client name is now Topal Limited, for whom we are going to discuss several issues. Obviously, they are indicating the same date. Let me just have a look at Exhibit 4, because obviously there is no change in the date. So whatever the change, whatever the date we have read in the start of this question, that is going to be used. It is going to be prepared by either you call yourself as a tax senior or tax manager. That's totally up to you. But then what is going to be the subject? See, this requirement C memorandum is going to discuss the fundamental principles as well as your UK corporation tax issues. So again, as it is like going to deal with requirement C1 and C2, in which one we will be discussing the ethical dilemmas as well as the corporation tax issues. So it's better if I keep it this way, various tax matters, or maybe you rewrite it in a different way. The proposed onboarding of client, or simply the proposed client engagement and their corporation tax matters. This could be like another heading that you can easily make. Okay, so the first thing is that I'm going to deal with the fundamental principles. Of course, I'll have to make a heading. And I told you people that there is like one more thing of making the heading. You are just going to highlight the basic heading. Control C is the shortcut that you're going to use for copy. And then you are going to paste it on the answer side. And see, the same heading is now being copied. So here the fundamental principles and the issues are going to be discussed. So the first thing is about, I think, objectivity, because our firm is already acting for their one of the shareholders, Sylvie. And if we act for the company as well, that will give rise to a conflict of interest, which will be compromising our professional judgment. So the first thing is that the objectivity of our firm might be compromised, as we are already providing services to one of the shareholders of Topal Limited, which will give rise to conflict of interest, right? So this is how you have mentioned the first point. And the thing is that every valid point that you are going to make is to be covering either one line, or maybe it is like going to cover up to 3 lines. So maximum up to 3 lines you can use for the sake of projecting your valid point. Okay, then what's next? There is another ethical concern, ethical rule, which is about confidentiality. Of course, if we are going to provide services to Topo Limited, the company, and the shareholders simultaneously, another conflict of interest would arise in respect of confidentiality, right? So we really need to avoid divulging confidential information with respect to one party towards the other party. So confidentiality is another concern, as Sylvie and Topol Limited are two separate clients, and we should avoid disclosing confidential information of one party to the other. So this is like another thing which is at stake. Then there is another ethical principle which is gonna be compromised in this case. And what is that? It's about integrity. Maybe whatever the information we are going to provide to company might not be beneficial for their shareholders and vice versa. So compliance are definitely required, so that the director of the Topa Limited needs to comply with the law. And here the difficulty may arise if they do not adopt the correct tax treatment regarding, especially with the overseas matters that we are going to address later. So with respect to integrity, it needs to be maintained, as Sylvie is the person who is controlling all the matters on the behalf of the company. So this might be a little bit risky thing. So here we would say that compliance to the relevant laws will have to be implemented by Sylvie. And here you may mention the overseas thing that they are going to consider later. And then there's like one more thing, and that's about professional competence. All right. So professional competence and due care. So compliance may be threatened if our firm lacks the relevant skills to advise on corporate matters. For instance, if our firm is good enough to deal with the individual, the Sylvie herself, but they do not know the relevant laws which are specifically to be implemented by the companies, then this is like going to be a question mark on our professional competence and due care. Right? Okay. Now the thing is, could you see that obviously professional behavior is not gonna be compromised whether we are going to take up two clients or even more than two clients, as in having the company and their shareholders both as our clients. These are the four fundamental principles which will be at stake. And this is like something which we had to explain, that what thing could be compromised. Now, the thing is that this question is of worth 5 marks. And we still need to mention one more point as well. Now, what could be the other point? What could be the last point, so that we will be like showing that how we have like covered the whole matter completely, how we have like covered 5 marks thing entirely. So either suggesting the possible solution of objectivity and confidentiality and even integrity, that could be like one extra point that you can apply over here. But the point is that they haven't asked that how this possible issue could be handled or could be mitigated, could be resolved. This is not something that they have asked you to write. They did say that which fundamental principles might create a threat before we agree to become Topol Limited's client. So I think their overseas matter has to be presented as in the form of separate point, as in integrity, as well as required level of professional competence and due care need to be ensured in respect of this integrity as well as professional competence thing has to be ensured, particularly in terms of handling Topo Limited's affairs with the overseas company, and that would be even becoming a more complicated issue if that is like going to involve the treatments related to some overseas tax rules as well. So we really need to ensure that whether our team members are capable enough to handle these things or not before becoming their tax advisors, right? So this is how I have made 5 valid points. And as I've told you people before, that each valid point, if it is like going to be properly covered, comprehensively covered in one line, then that's sufficient. Otherwise, you may make 3 lines in order to let your examiner, let your paper checker understand that what you actually wanted to say. But avoid making big paragraphs because this would end up just wasting your time, and your time is very important. You really need to secure time in order to deal with everything that is there in your exam, right? Now, what we have next, it's about requirement C2, which is of worth 6 marks. And here we will be dealing with UK corporation tax issues relating to Vendsco. So this is like an overseas matter that we will be discussing. I can confirm that Vendsco is a non-UK resident for tax purposes. Okay, so Vendsco is a non-UK resident company, and we need to explain whether or not Lee is correct to conclude that Vendsco is not a control for a foreign company, a CFC. See, you will have to challenge the statement made by Lee in respect of Vent's score. And if you're going to challenge this thing, that means you are going to apply your professional acumen skill. So we will have to first justify, we'll have to first identify whether the statement passed by Lee is correct or not, and whether the company is falling under the definition of CFC or not. And then the next verb is once again explained, which is obviously would mean that I'm going to pick up the word processing document. And in case of section A, my base document, my home document is always the Word document. And whenever I tend to produce any calculation, I'll be opening up the spreadsheet, clearly labeling it, making the same headings, and doing the calculation over there. And this is like saying that whether Topol Limited's investment in Vent's company shares could affect whether Topol Limited will be required to pay quarterly installments of corporation tax for the year ending 30th September 26 and for the year ending 30th September 27. And you should identify any further information required to determine I mean, the installment related issue. You should ignore any CFC issue. Okay, even if your examiner wouldn't have specifically mentioned this thing that you should ignore CFC issues, you should know that what he is exactly asking you to do. I mean, you need to identify whether the company is a CFC or not. You are not going to keep discussing about the CFC charge and the exemptions in which the charge is not going to apply. I mean, no such thing has been asked. Though, what I have learned from the examiner report that he says that majority of the students wrote everything that they knew about CFC, the rules, whether they are CFC or not, which was obviously required in this question, but then whether there is going to be any CFC charge or they are going to be covered under the exemption. But this is like something which is not being asked over here. And you are not going to produce anything which is unnecessary, which your examiner does not want you to produce, right? Okay, so I'm just going to straight away take you to the standard solution. In fact, I think I should open Exhibit 3 first, showing you the question, and we'll be discussing it first, and then I'll take you to the standard solution. See, we know that thing that the company, I mean, Topol Limited, does not control Vent's company. As you could see, the shareholding is just 30%. If you're going to control any company with a shareholding of more than 50%, whether that company is like resident of UK or not, that is becoming your associated company. But here, the first thing that we have determined, that company doesn't control Ventsco. It doesn't own more than 50% of the shareholding. So they are not the associated companies. So when it comes to their installment perspective, it is going to be unaffected. In fact, I should this came first in the line. Otherwise, according to what they have asked, by applying the rule of first thing first, I think I should first making a discussion about whether the statement passed by Lee is correct or not. I just opened the exhibit and started with what I saw first. Okay, so what was the statement of Lee? He says that it's a CFC. See, what a CFC is, a controlled foreign company, is a non-UK resident company which is going to be controlled by UK resident persons. And in the definition of persons, we have both, either the company or the individuals. So Ventsco is clearly a non-UK resident company, but the control is given where we find that the shareholding is of more than 50%, either by the individuals or the companies. Here we are talking about Topal Limited having 30% holding in Wensco, but Topal Limited, though they have bought 30% holding in Men's Limited, could you see that the other shareholder of Wensco is resident in Zootopia, in which they have got 10% shareholding? While remaining 10% shareholding is being held by a UK resident individual. So, what exactly the structure is, let me just show you. That Topal Limited is having 30% holding. Another company which is found in Zootopia is having 10% holding. That is like an other overseas company. While another UK resident person is having 60% holding in Wensco. By the way, you will have to discuss the relation of Topal Limited with the Wensco, but considering one of the UK resident shareholders of Wensco who is having 60% holding is someone who is said to be controlling this company, and this control is not being exercised by the Topal, rather it is being exerted by a UK resident individual. So this is like the two different things, despite the fact their residence is same. But if I say that what Lee said, that is incorrect, and what was the Lee's statement? He said that Wensco is not a foreign controlled company. It is a CFC because it is being controlled by a UK resident individual, right? So the company status is clear. Though it is not being controlled by Topal Limited, but it is being controlled by a UK resident individual. So from UK tax laws perspective, it is inevitably a controlled foreign company of UK. So the statement passed by Lee is incorrect. Okay. Coming to the point that whether it is like having any impact on quarterly installments, I told you the company Topal Limited is not having a shareholding of more than 50% in uh, Wensco, which is why Wensco is not an associated company for Topal Limited. And if they are asking that when the quarterly installments are gonna be due for Topal Limited, see, when we see that Topal Limited's augmented profit, by augmented profit, I mean to say the taxable total profit plus dividends, which Topal Limited is receiving from a non-associated companies, in which Wensco is falling, because this is the company in which the shareholding is not found to be greater than 50%. So the taxable total profit of the Topal Limited as well as the dividend that Topal Limited is receiving from those companies in which shareholding has not crossed the threshold of 50%, When they both are combined together, that makes up their augmented profit. And augmented profit is something on the basis of which we define that whether the company is liable, whether the company is eligible to pay corporation tax in quarterly installments or not. If the augmented profit would be crossing the threshold of 1,500,000 pound, then this is basically the normal profit threshold. This is basically the point where Topa Limited will be required to make quarterly installment payments. Okay. So once again, having a look at the information given with respect to Topa Limited. In this paragraph, it is said that they are concerned that Topa Limited investment in Ventsco will lead to a future receiving of dividend income, which is going to be impacting them in such a way that their profit, which was previously been found less than 1,500,000 pound by including the dividend received from non-associated company, will make their augmented profit to cross this threshold. Okay, well, if this is the case and Topa Limited's augmented profit would be crossing this threshold of 1.5 million, even then in the first accounting period, Topa Limited will not be required to pay the quarterly installments. And in the second accounting period and onwards, after Topa Limited would have become a large company, a company whose augmented profit will have crossed the threshold of 1.5 million, then they would start paying their corporation tax in quarterly installments. So when it comes to their accounting period ending 30th of September 2026, see, it is said that they make up their accounts on yearly basis, which ends on 30th of September, and they will be like acquiring the shareholding on 1st of November 25, which would mean that this date will be falling in the accounting period, which is ending in the year end 30th of September 26. So after acquiring shareholding in Vensco and receiving dividend from such non-associated company, maybe the taxable total profit, which was otherwise lower than 1.5 million, after having the dividend figure, the augmented profit would cross the threshold. But this is like going to happen for the first time, and which is why there's going to be no quarterly installment payments to be paid by Topa Limited as far as the accounting year ended 30th September 2026 is concerned. But after becoming a large company in the next accounting period, which will obviously be ending on 30th of September 2027, Topa Limited will then be required to make quarterly installment payments. Now, my question to you people, when a company has to start paying their corporation tax liability in the form of quarterly installments, what is going to be the first month in which this installment related to corporation tax will be due? Yes, seventh month of an accounting period. Perfect. As this accounting period is like running from October 26 to September 27, it is always the seventh month of an accounting period in which the first corporation tax installment will be due by a large size company. So if October is the first month, then October, November, December, January, February, March, and April. April 27 is probably, in fact, precisely going to be the seventh month in which companies shall start paying their corporation taxes, uh, which is like gonna be their first quarterly installment payment. But I think we need not to drag this question so deep, because they did say that, let's have a look at the requirement again. we need to explain whether the company investment in Vensco would affect the fact that they'll be paying quarterly installment payment, and we showed that if it is crossing the profit threshold of 1.5 million, then yes. But for the year ended 30th September, being the first accounting period after becoming a large size company, there's absolutely no need to worry at all. But for the next year, yes, they will have to start making their corporation tax payments in quarterly installments form. But I do not need to identify that what is going to be the month in which first corporation tax installment needs to be paid out. I need not to identify that what is going to be exactly the first corporation tax installment figure, because these are those things for which for the sake of like determining the corporation tax installment figure, you need to have some more data as well in the question to draft your answer. And on the other hand, there is like one more thing. They did not ask this thing in the first place. If they did not ask anything about such issue, then there is like no need to produce any such unnecessary answer, right? Let me just quickly take you to the standard solution. So this is about why the statement of Lee is incorrect. That Ventsco is definitely a controlled foreign company, but not from the perspective of Topo Limited, considering the individual who is UK resident is having a control of more than 50% shares in the company, is definitely making this company to be called as a CFC. But I did not drag this information into whether there's like going to be any CFC charge or whether we are going to get any exemption, because this is not the thing which is being asked over here, right? And see, they did put a suitable relevant heading first, and then they drafted their answer. And this is the issue related to quarterly installment payments. All right, I think you people are done with this. If not, then please let me know. I can show it to you again. And precisely, we have discussed it already. Now we are having section B. In section B, we have two questions, question number 2 and 3. Each will be carrying 25 marks, out of which 20 marks are dealing with the technical concepts, and 5 marks will be allocated to those students who will be projecting their professional skills. In this case, analysis and evaluation, skepticism, as well as professional acumen will be judged, will be something for which individual for which your paper checker will be looking for. But communication skill is something which is not required to be projected over here. Okay, again, this is the background information. Kindly have a quick look on the background information, and then I'll open the exhibit. And in case of section B, the exhibit contains only the information, the scenario, and requirements are mentioned are separately in a different tab. So let's first have a look at the background information, and then I'll click on the exhibit. to update me once you are done reading the background information. I think it must be done by now. So I'm going to click on the exhibit. This is exhibit 1. And frankly, with section B questions, you will always be having only one exhibit and the whole information will be contained in that exhibit. Kindly start reading the question. I hope by now you people must be done with the entire exhibit. And now I'm going to click on the separate tab which entails all the requirements related to this question too. And same is the scenario going to be with question number 3. Now in this question, it is said that you should assume that today's date is 1st of June 2026, and we have part A. In respect of Cuba Limited's sale of its shares in Pepsi Limited, we need to explain for 6 marks the chargeable gains implication for Cuba Limited. This is for 6 marks, and another 3 marks are to be explained with supporting calculations the stamp duty land tax implication for Pepsi Limited. Okay, just tell me one thing. What do you have to say that in the first part, though they are asking, we need to explain? So, one thing is like for sure that if they ask us to demonstrate, to narrate, to explain, or brief them something about, we need to click on the word processing document, right? And if something is like purely calculation based, then I'll be doing it on spreadsheet. And again, if the question is like containing both the elements, you'll have to produce the calculations as well as you'll have to explain the narrative. Then you'll be doing the descriptive part on the Word document, and then spreadsheet will be used for the sake of doing the calculations, and you will then be connecting them by clearly labeling both things. And if the margin of calculation is very low, a little bit of the calculation is required, then I am not in a favor of like using both of the documents. You can use the word processing document to first elaborate the situation and doing a little bit of the calculation on the on the word processing document. But now I'm coming back to the question that I wanted to say, that here, though they say that we need to explain, but it is something in which chargeable gains implication for the company are to be addressed. What do you have to say? Will that be requiring any sort of calculation as well? Does this mean that they are asking us to draw some sort of calculation as well? As we have to develop this habit of identifying that what is exactly our examiner is asking, we do not have to indulge ourselves into unnecessary thing. Yes, your answer is right, and the answer is no. He is just asking that what is going to be the treatment. For instance, if someone is a high rate taxpayer, you shall be saying that he will be paying taxes at the rate of 40%, but then no conclusion, no plus minus, no showing of calculation has to be drawn. So, yes, you will be like, obviously, your answer will be revolving around what the tax treatments are going to be and whether it is like going to be carrying any sort of treatment or not. But you will not be drafting any computational thing. I mean, this is the precise thing which I want to say. Okay, again, I am opening the exhibit, and in the start, you may find the issue or the scenario revolving around the sale of shares in Tapsi Limited. And this part of the question is for 6 marks. Technically speaking, if I just go with the standard of 1.8 marks, 1.95 minutes per mark, you have approximately 11.7 minutes. I mean, approximately 12 minutes, but you really need to train your brain in such a way. It is not a difficult question. It does not require any calculation. It does require only the description. And that's not like that. Whatever you have learned about sale of shares, you are going to write down the article on it, right? So it is not an article writing competition. Whatever they're asking, you need to write. You should produce 6 valid points, and there are certain requirements, though this is of 6 marks and you have approximately 12 minutes part. uh, Being an easy question, you should spend fewer minutes than 12, as there could be a chance that in your exam there is a certain part which is like a little bit challenging and would be requiring more marks than expected. So I am going to give you people 5 minutes starting at this point. I'm just going to turn my timer on. 5 minutes are going to be given to you, and I would like you to list down 6 valid points, because this question is for 6 marks. Yes, you're right. But okay, just try. Even if, but see, the first thing that you have identified, that is quite good. But try writing down if anything can complement this situation, and you can at least make few points, even if you would not be able to make 6 marks. So your time has already started, people. And the time is already up. Would you people like to share what you have written? Okay, so TAPSI does qualify for SSE, which makes the gain on the sale to be exempt from tax. To qualify, they should hold 10% or more shares, and other condition holder shares for 12 months in the last 6 years. Yes, so far so good. Right over here. Nobody touch my thing. Anyone else? Okay, yes, the gain which is arising on the sale of Kuba Limited share in Tepsi Limited will be exempt from corporation tax under the substantial shareholding exemption. You're right. And for that, you'll be like obviously explaining that why this is so, that the company has to have at least own 10% shareholding. By the way, it is 100% shareholding they have in Tepsi Limited. And this should have been kept in 12 months prior to the sale of the shares. And the Tepsi Limited has to be a trading company as well. So this is like another important point. Then if you just have a look at the exhibit again, you had to discuss the chargeable gain implications for Kuba Limited. Not just they have sold the shares and you have discussed it appropriately. So out of 6, 3 marks are for sure gonna be granted to you. But there is like one more transaction that has happened before this disposal of shareholding, the entire shareholding. It says that on 1st of April 24, few years ago, Kuba Limited had sold a warehouse to Tepsi Limited for its market value on that date for 340,000 pounds. So while Kuba Limited has 100% shareholding in Tapsi Limited, would mean that they are not just the associated companies, they are a part of Chargeable Gains Group. They were a part of Chargeable Gains Group as well. And back in April 24, they had transferred a warehouse. And whensoever this happens in between Chargeable Gains Group member, it happens to be taking place at no gain, no loss basis, while the acquiring company is assumed to be acquiring the asset over its index cost. So Kuba Limited in the past did not pay any tax at all. And at the point of like transferring this asset, the asset's ownership is now lying with Tepsi Limited, while there had been no tax implication on the seller company. But the asset which was previously transferred at no gain, no loss basis, this is like still with the recipient company with Tepsi Limited. And now they are going to leave the group. And there happens to be another chargeable gains implication. Yes, but see, you could find it out, and whatever the words you have in the mind, you could have written. So I'm just assuring you that out of six, you could easily secure 3 marks, and by writing down something about the building, you could be able to score few more marks as well. So it's like the sale of the warehouse, though it originally took place at no gain, no loss basis. Considering the fact at the point that Tepsi will be leaving the group, they still own the building, and this would give rise to a degrouping charge. Okay. And degrouping charge calculation is somewhat similar to the calculation of gain had we have to calculate the gain at the point when the asset was actually transferred from one company to another. So degrouping charge is like calculated on exactly the same rules that what had been the chargeable gain figure if instead of recognizing this transaction at no gain, no loss basis, we had to actually carry out the calculation of gain. So at that point, of course, what the disposal proceeds were, then what the cost was, and what was the indexation allowance up to that date when the asset was actually transferred from Kuba Limited to Tapsi Limited. And whatever the value comes out, though, that was not recognized previously in the past because it took place at no gain, no loss basis for tax purposes, but same value is now going to be determined, and this is going to be added into the disposal proceed of the shares, and we call that figure as degrouping charge. So if something is like going to be added to the disposal proceed of the shares, disposal proceed of the shares will be increased, and when the shares are being sold, the chargeable gain in respect of shares will be increased as well. But wait, when the shares are being sold, they are not to be taken into account because it is said that the gain or the loss is exempted perfectly, completely, as it is being covered under substantial shareholding exemption. So we do not even need to calculate the degrouping charge because where would we add it? We had to add it into the disposal proceed, which is already considered to be an exempt disposal under SSE, I mean substantial shareholding exemption rule. So degrouping charge will be becoming exempt as well. But for instance, if the substantial shareholding exemption rules were not fulfilled, and Kuba Limited had previously transferred an asset to Tepsi Limited, and now Tepsi Limited is leaving the group because Kuba Limited is selling the shares in them, then whatever the degrouping charge we would calculate, that shall have been added into the disposal proceed of the shares, and then we need to see that what the shareholding cost was, and the indexation allowance would then be deducted to see that what is going to be the chargeable gain figure with respect to the disposal of shares by Kuba Limited in respect of these Tepsi Limited shares, right? I'm just gonna be taking you to the standard solution. Now, the standard solution is like given in the form of two big paragraphs. I instead urge you people to present your answer in short form. I mean, you'll be making like the answer in smaller paragraphs. This is like a better strategy for you people. So this is the first statement. The gain arising on the sale of Koba Limited, 100% shareholding in Tepsi Limited will be exempt as it is being covered under SSE. Then what the second line is, Koba Limited has owned at least 10% of the holding in the company in 1 year prior to the 6 years, and the company is a trading company, right? And then what other the valid point is, as far as the sale of warehouse to Tepsi Limited back in 24 was concerned, they took place at no gain, no loss basis. And that is because Kuba Limited owned 75% of Tepsi Limited shares at that time. However, as Tepsi Limited has left the group within 6 years of no gain, no loss transfer, while still owning the building, a degrouping charge will arise. This degrouping charge would be added to the sale proceeds received by the Kuba Limited in respect of the sale of the shares. But then substantial shareholding exemption will be extended, as this had to be added into the disposal proceeds of the shares, and the share disposal is already exempted under SSC. So there's like going to be no implication for corporation tax purposes, because company, if they're not going to calculate any gain, they won't be paying any corporation taxes. Had they computed any gain, they were supposed to pay corporation taxes, though individuals do pay CGT on the disposal of any chargeable assets. And for companies, there is no concept of CGT. There's no concept of capital gains taxes. It is always the corporation tax that companies have to bear, right? So by using different colors, I have emphasized on one thing, that how you could turn this thing into 6 valid points. Okay, let me just take you to the marking scheme as well. This is like one more thing on which I would like to draw your attention towards. See, technically, there were approximately 6.5. I mean, approximately 7 marks available. And by presenting the answer in an appropriate way, you could secure 6 marks even if you haven't addressed everything. So there are 7 points, basically according to examiner, which you could write over there. But any of the 6 valid points, if you are going to produce, you will be able to secure maximum marks. So there's always a bigger pool of available marks available in case of advanced taxation. And as long as you are going to address the maximum valid points, the minimum valid points, you will be able to secure maximum marks. But if you go beyond that, of course, nobody is going to secure more than 6, right? Then quickly having a look at the second requirement of this question. Now here we explain with supporting calculations the stamp duty, land taxes implication for Tepsi Limited in this part of the question is carrying 3 marks. Now we have to discuss the stamp duty land tax implication. See, stamp duty land tax implication for Tepsi Limited is being asked in this question. And I think the calculation is not extensive. So one may use the same Word document for like producing both the explanation and doing the computation. But even if it's such meager sort of calculation, you think that it is going to be easily manageable using the spreadsheet, then the choice is yours. This is not something on which you will be losing marks. But yes, explanation is something which is always done on the word processing document. See, STLT, the stamp duty land tax, is always payable by the purchaser of any land and building. And as far as this exhibit is concerned, they are talking about a warehouse, the building, which transferred from Kuba Limited to Tepsi Limited back on 1st of April 24. So at the point when this building was transferred by Kuba Limited to Tepsi Limited, this was taking place in between the chargeable gains group member, and whensoever there happens to be an intra-group transfer, it is considered to be an exempt transfer for STLT. So technically speaking, at the point of transfer of this building, no stamp duty land tax was originally paid. But irony is that when Tepsi Limited had left the Kuba Limited group, and unfortunately, that happened within 3 years of acquiring the asset via no gain, no loss basis. That is actually a totally a game changer thing, because now this STLT is gonna be due in respect of the asset which is like previously been transferred to Tepsi Limited, and Tepsi Limited being the acquirer, being the purchaser of the building, shall have to pay this tax. And what was the purchase price of this building? See, now, what do you think? What value do I need to pick up for the sake of calculating STLT? And you know that in this tax tables, which is mentioned on the bottom left side corner of your exam portal, you may find the important rates. Let me just show you that STLT rates will be provided in your exam. See, this is like STLT in respect of non-residential. I mean, uh, the commercial buildings, the ones being used in trading or something like that, because the STLT implication on residential properties is very much there practically, but that's not a part of our syllabus. Okay. So you know that on first £150,000 of the purchase price of the building, we will be charging no STLT. Then on an excessive amount, we'll be charging 2% STLT. And then on an amount which is found to be in excess of 250,000, I mean, this is a step-by-step process, then we shall be applying the rate of 5%. Now my question is once again, which value do I need to use? Because the date on which this building was transferred, it had a market value of 340,000. Though the transferor, the seller acquired the building for £285,000. And by the time Tepsi Limited had left the group, its market value has been escalated to £352,000. They might have mentioned one more date as well. As in, they could have said that back on 1st April 2024, when Kuba Limited transferred the warehouse to Tepsi Limited, though it had a market value of 340,000, the price that Tepsi Limited paid was, let's say, 300,000. So the price paid could be different from the market value of the asset. The seller itself had acquired the asset for £285,000. And when by the time when Tepsi Limited had left the group, and this is basically the point when STLT is going to be due, the price of the building had been escalated to £352,000. But which value is to be taken into account? Yes, when actually the transaction took place, because what the exact matter is the transfer of asset, and precisely Tepsi Limited acquiring the asset at that time, what exactly the market value of the asset was, what exactly the genuine price of that building was, that is to be taken as the purchase price for the purchaser, and this is the value on which STLT shall have to be calculated. So instead of like applying 5% straight away on £340,000, first 150,000 is like going to be charged at no rate. Then on the next 100,000, we will be charging the rate of 2%. And then on an excessive amount, I shall be applying the rate of 5%. See, so this is like a step-by-step approach. It is being like calculated in such a way that I shall not be applying one straight rate on the total value altogether. Let me just show you the calculation and as well as explanation. Yes, you are right. Whenever there happens to be a transfer of asset in between the chargeable gains group member, that would be taken as at no gain, no loss basis. So apparently, initially that was an exempt transfer, no STLT was due. And if Tepsi Limited would have left the group after 3 years of acquiring the asset, even then there had been no need to charge STLT. But unfortunately, as after acquiring the asset at no gain, no loss basis, the purchaser of the warehouse, the purchaser of the building is going to be leaving the group within 3 years. This is like something which is going to be resulting into an activation of this STLT charge, right? So it's of 3 marks, but here it is not exactly required that I'll be producing 3 valid points, because it is not just the explanation which is required. I'll have to produce the computation as well. So it's all about requirement 2, the stamp duty land tax. Okay, so I would say that Pepsi Limited did not have to pay STLT at the time when they acquired the asset, because it was an intra-group transfer. But as Pepsi Limited is leaving the group within 3 years after acquiring the asset, will give rise to stamp duty land tax being payable by them. And I'm just going to show the calculation. And again, it is up to you if you'll be doing the calculation on the spreadsheet. On first 100,000, there is going to be no STLT. Sorry, on first 150,000, there's going to be no STLT. Then from 100,000 till 250,000, I mean on next 100,000, there is going to be a charge of 2%. That would be considered as equivalent to 2,000 pounds. And then on the remaining, because out of 340,000, I've taken into account the implication related to 250,000. So on the excessive 90,000 pound, we shall be applying the rate of 5%. So that would give rise to a tax figure of 4,500 pounds, right? So this is how, what is going to be the total STLT, which is now payable on at the time when Pepsi Limited is leaving the group, which is 31st May 2026. I think I should mention this thing as well. Okay, could you please tell me the total amount? So it's very simple. It's 6,500, right? And whenever you think something is like important, it needs to be highlighted, then you may turn the letters into bold, turn the statements into bold statements. You may use the color. Though you will not have to spend a lot of time in doing this coloring and turning the statement into bold letters activity, but highlighting the main features, the main parts is like very important as well. All right, is this thing clear to each and every one of you? Now, again, having a look at Requirement B of this question, where we need to explain. I'm going to pick up the Word document, and then the supporting calculations are to be done. And it is like totally up to you whether you are comfortable using only the Word document. Otherwise, you may use spreadsheets simultaneously, but do not forget to label them properly. And then showing within the brackets on word processing document that C on the spreadsheet working one, so that your examiner will not forget to check your calculation, though he doesn't forget ever, but it's like this is how you are going to make your presentation much appropriate. The VAT annual adjustment and the final adjustment resulting from the sale of the office building. So it is the annual adjustment and then the final adjustment, and final adjustments are usually carried out when the buildings are sold. Which debits limited will be required to make under the CGS, I mean capital goods scheme for VAT in respect of year ending 30th of June 26. And this part of the question is carrying 6 marks. All right, again, I'm going to be taking you to the exhibit. I'll be telling you that how we need to address to this answer, and then I'll be quickly taking you to the standard solution. See, this is basically the situation in respect of VAT capital gain goods scheme. See, in this case, when office building was purchased, back on 1st of July 2020, when it was like newly constructed, it was a new building and it got purchased, its price was £410,000 and it was a VAT exclusive figure. Okay, so this is the price on which the building was acquired. We need to see that how much of the VAT was charged at the point of purchase. And considering you have gone through the entire information, at that point, the whole of the building was involved in producing taxable supplies. So all of the VAT which we have paid shall be considered as taxable, and it was recoverable completely in the year one, in the year in which the building was acquired. So it is like I'm just going to use the spreadsheet for randomly showing the calculation. Because in the end, I'll be showing you the standard solution. So what is now happening? 410,000 is the price on which 20% of the VAT must have been charged, and it was completely recoverable. It was equal to £82,000, and it was like completely recoverable in year one. And if there happens to be no change in the later years, I will not be making any adjustment for the future years. So for instance, if it is said that the taxable usage of the building will remain same for the first 4 years, so there's like going to be no change. Whatever you have recovered will remain the same. There's like going to be no alteration in it. But the story changes as there happened to be a reduction in the taxable usage to only 1/3 of the building starting from 1st of July 24, because the situation remained same till 30th of June 24. So that would mean that from July 20 to June 21, then June 22, June 23, and June 24. So it is like for the first 4 years, there happened to be no issue, but starting from 1st of July 24, uh, the taxable proportion got changed. So of course, in this year, we need to see that as the taxable percentage of using the building is reduced, so what the amount of VAT related to that year, which has already been recovered, shall now be payable to HMRC. And see, this topic of capital goods scheme and even that related to the recovery of otherwise exempt VAT. These are the favorite topics of your examiner, and he tends to discuss them on frequent basis. Okay, so for the year ended 30th of June 2025, which is the year 5. All right. So sorry for bearing with me. Um, Now the thing is that, as I said, that in the year one, the whole of the building was being involved in producing flexible supplies. So whatever the VAT we have paid at the point of purchasing the building was completely recovered. So this is something which we have already got from HMRC. Then in the year five, and this is like gonna be continued till year six as well. In the year five, there happened to be a change in the composition with which the building was being used for making taxable supplies as one third. One third would mean 33.33%, right? So one third of the building was being used for purposes other than the taxable purposes. So this much proportion of the VAT we have paid is gonna be it is like gonna be payable to HMRC, though we had already recovered the VAT amount completely in the start, but one third of this amount shall have to be payable to HMRC. But this adjustment is not to be spread on total amount. Rather, in this case, the capital goods scheme is something in which the adjustment is to be made uh, like keeping 10 years in mind, because the adjustment period for 10 years, and if anything happens in the first 10 years, then whatever the year in which the change happens, only for that year the VAT amount needs to be reinstated. We'll have to declare, we'll have to conclude whether we shall have to pay back a certain amount of VAT related to that year, or we'll have to get an additional recovery with respect to that particular year. So for year five, how much of the VAT is payable? It is of 5467 because of the reduction in the percentage with which the building was being used for taxable supplies purposes, for making taxable supplies. And then in the year six, the same has happened, which would mean that even by the end of this year, the same amount, I mean, 82,000 being the total amount of VAT. Again, in this year, 1 out of 10, 10 is the complete adjustment period. Again, there happened to be a reduction in the taxable proportion. So the same amount of the VAT will now be payable to HMRC. But you could have like straight away calculated it, because it is so clear with the information given in the question that this happened for year five and year six. So alternatively, what you can do, you could show that 82,000 is the amount of VAT. And this is like the situation for 2 out of 10 years, in which almost 67.67% of the VAT is to be paid back to HMRC. And this is like exactly going to give you an altogether the same figure. As in, what is like the total of double of this 5467? This is like 5467 plus 5467, that's of 10,934. Thank you. And if you are just going to do it quickly by taking 2 in the numerator, because it is the same situation for both of the years 5 and 6, so you will instantly get this amount. So either you can write that 5467 each for the year 5 as well as for the year 6 is payable to HMRC, or you would say that altogether for year 5 and 6, 10,934 pounds are gonna be payable. And again, this is like one thing which I had to mention right in the start, that whenever you are going to answer the question in on the Word document, you have to put a point. Even if you are not, if you forget putting the statement, you are not going to be penalized, that all values are in pounds or GBP. Okay. And then what is like going to happen when the building is going to be sold? See, uh, in the first 4 years, there had been like no change in the percentage with which the building was being used for making taxable supplies. And then in the next 2 years, we have seen that the portion, the percentage with which building could be used for making taxable supplies got changed. So till now, 6 years are gone. Number one. And then the building is changed. Now, sorry, the building is sold. Now just tell me that 6 years are gone since the building got constructed and now it is being sold. At this point, when the disposal is being made, what is now going to be the tax implication? Any building which is 6 years old, which is like more than 3 years old, what is generally the treatment we need to apply at the point of disposal? What do we consider this disposal as? If a building is more than 3 years old, then it will be treated as exempt disposal for VAT purposes. Altogether, the whole of the building will be treated as exempt disposal. Are you getting my point? So that would mean that by the time the building is sold, by the time the building was sold, it is considered as if the disposal is like giving a picture of building to be treated as a complete disposal. The complete exempt disposal. And how many years out of the first 10 years of adjustment are left? I mean, 4 years are left. So for 4 years, whatever the VAT we have recovered, that shall be paid back to HMRC. Are you all getting my point? As I have told you that there are in total 10 years with respect to the adjustment of VAT. And this is like applicable where the cost of the building and the land is of at least 250,000 pound, which is quite clear as the building was costing 410,000 pound. So when out of 6 years, we have seen that in the first 4 years, there had been no change in the taxable proportion with which the building was being used. And then in the next 2 years, there was a change in the percentage with respect to making taxable supplies. So altogether, from ownership point of view, 6 years are gone. And now we are going to sell the building. 4 years are left. And at the point of disposal, we need to consider that what the status of the building is. Now, building is 6 years old. It is now to be treated as an exempt disposal, an absolutely 100% exempt disposal, which would mean that for a period of leftover 4 years, whatever the VAT we had initially recovered from HMRC, now it is gonna be paid back to HMRC all in all. I mean, everything is to be paid back, not 82,000 pound completely, but the amount of VAT in relation to last 4 years. So this is like going to be the final adjustment, 82,000 as now 4 out of 10 years are left. Though initially we recovered 100%, but now it is like why we recovered 100%, because it was like totally involved in making taxable supplies. But as it is now an exempt disposal, it is not being considered to be used for making taxable supplies. So nothing is to be retained to us. So how much of the VAT is now payable to HMRC for altogether 4 years? This is going to be, I believe, thank you for helping me out. It is 32,800 pounds. So this is like the amount of VAT with respect to 4 years, which is now gonna be payable to HMRC at the point of disposal of the building. Let me just show you the standard solution. There you go. Just read it out. I hope you have understood the issue, but this is how your examiner has drafted the answer. Do let me know once you are done reading this answer, and then I'll take you to the last requirement of this question. The question is, I'm not yet done with the chapters, still stuck on the sixth chapter. See, you really need to cover the syllabus first. And today is 8th of August. Try covering the whole of the syllabus by 18th of August at least, right? So covering the syllabus is like very important. Before that, you rush towards the practice. And you really need to obviously speed up the process as well. You will have to spend 3 hours on daily basis, at least three, in fact, more than 3 hours in order to cover the syllabus. All right, now I am gonna be taking you to the last requirement of this question, and what the last requirement is. Um, it says that we need to calculate with supporting explanation. So the emphasis is much on doing the computation. The increase in the DB's Limited corporation tax liability for the year ending 30th of June 2026, resulting from the sale of the office building. So again, it is requiring an explanation, but it does require the computation. Now, this time round, I'll be using both of the documents. Okay. So the requirement is requirement D. An appropriate suitable heading has to be made. So what I'm going to do, I'm just going to copy it. Control plus C. Going to the Word document, I'm just going to paste it. This is, by the way, requirement C, not D. So these are basically the commanding words, doesn't seem to be suitable for a heading. So I'm just going to remove them, that to calculate or this provide the supporting calculations. I'm just going to turn it into a heading. The increase in DB's limited corporation tax liability from for the year ending 30th June 26, resulting from the sale of the office building. Clear? So this is how I did not have to type much. And I believe that this is like going to be the most appropriate type of heading, because it is like straight away copied from what examiner said. All right. Now what happens next is, I'm just going to open the exhibit to see the information. See, first of all, the company is going to dispose of the office building, and this is like being disposed of for a gain of 55,000 pounds. The company is already having a trading profit of 40,000 pounds. So from 40,000, their overall taxable total profit will be increased to, it's 40 and 55, that makes up 95,000 pounds. So I'm just going to write it down on the response sheet. So sale of the office building has taken place for a gain of 55,000 pounds, and that's how resulting into taxable total profits to become, I'll show, 40,000 pound being the profit and 55,000 pound being the gain. So it is like all being included while we are making the corporation tax pro forma. So it is like going to be of 95,000 pound with respect to year ending 30th June 2026. Right? Okay. So this is how we have mentioned what the taxable total profit of the company is. Now, you are already familiar with the corporation tax rates. If a company is having their augmented profit to be like either equal to or below 50,000 pound, then small rates would apply. In between 50,000 to 250,000, we shall be applying the marginal rate, and afterwards we shall be applying the main rate. But see, this slab which I'm talking about, the 50,000 and 250,000, is for those companies where there is like no concept of associated company. But there is like, I believe that there is a concept of associated companies in this group. See, Tapsi Limited and Kuba Limited are both in the group, as Kuba has got a control of more than 50%, though they are going to sell the shares. But if a company had been an associated company for any point in time during the year, then it should be included as an associated company for the current period, and hence it will have an impact on profit threshold apportionment. Now, when you have a look at the question, you will find that Kuba Limited has already been 100. Dibis Limited is now joining the Kuba Limited, and they, prior to this date, they had Dolma Limited in their group. So in this accounting period, their former shareholder was Dolma Limited and their new shareholder is Kuba Limited. So that would mean that from Dibis' point of view, at some point in time, they were associated with Dolma and then they got connected to Kuba Limited. So they both are to be treated as a part of their associated group members for the current year. Though for determining the size of the company, where we have to be careful about the profit threshold of 1.5 million, and then we decide that whether the company shall be paying their corporation tax liability either in quarterly installments or in single go. There we actually consider the number of the associated companies till the end of previous accounting period. But for determining the companies to be there in associated group, we need to consider those companies who are a part of our associated group till the end of current accounting period, no matter they had been connected for a certain part of the period. But if they had been connected to the group in the current accounting period, even for few months, they will be treated as part of our associated group for profit threshold apportionment purposes, and hence they will be like impacting our corporation tax slab. Okay, so I'm just going to write it down first and then I'll take up the question. Just sorry for this. Okay, so as Koba Limited and Tepsi Limited are associated companies already with Dibis Limited because Kuba Limited has a control of more than 50% in both Pepsi Limited and Dibis Limited, right? But do not forget that in the same accounting period, Dibis was associated initially with Dolma Limited. From Dibis Limited, that is also an associated group somehow for some period of time. So we will say that Dolma Limited is also a part of associated group for Dibis in the current accounting period as Dolma Limited had a control over, and by control, I mean to say where the shareholding is found to be of more than 50%, had a control of over 50% in Dibis Limited prior to Kuba Limited, right? So this is like how these all companies are there in the group. So for this sake, I would say that profit threshold will be changed. And if you would like to show the calculation on the spreadsheet, that is like totally welcome. And as I said that I'll be doing it now on the spreadsheet. The lower limit will now be, I'm going to copy the heading and just going to paste it on the spreadsheet. This is about working one. So what about the lower limit? It's of 50,000, but having 4 companies in associated group, it is now going to be changed to 12,500. And what about the upper limit? It's normally of 250,000 pound, but having 4 associated group members, it is going to be changed to 62,500. Now again, 12,500 is the lower limit, and I'll say see spreadsheet. Though I am personally speaking, I'm not in a favor of like doing such nominal calculations on the spreadsheets, but I just really wanted to revise this thing so that you come to know that how the things are to be taken into account when you are using both the documents. See spreadsheet for working one, and upper limit to be 62,500 pounds, and I'm just going to copy and paste the same information alongside this, right? And then what next is, I'm just going to do the calculation as what is exactly the taxable total profit is. Though augmented profit decides the tax rate, but there is like no information about the dividend which DBs Limited is receiving. And if in case they are receiving it, it is like already crossing the threshold of 62,500, which is now the revised threshold for a company to charge the main rate. So that would mean that when whatever the rate is, that is always applicable on the taxable total profits, which is like in this case 95,000 pounds. Okay, so what we are going to do, I am now going to calculate the corporation tax value. This is working to 60, sorry, 95,000 pound is the taxable total profit. First of all, I shall be charging the main rate 95,000 pound into 25%. So that's going to be equal to 23,750, against which I'm going to deduct the marginal relief. I hope you know that how the marginal relief is calculated. It is like going to reduce your tax liability. So this is about upper limit, which is in this case 62,500 less augmented profits. Well, in this case, the taxable total profits and augmented profits are oh, I am so sorry. This is not the place where we shall be charging the marginal relief, because 95,000 pound, as 95,000 pound is the taxable total profit, which is like more than the upper limit threshold of 62,500, would mean that we'll be charging the main rate. So 62,500 into main rate. The main rate is 25%. So here the corporation tax liability will turn out to be 15,625 pounds. Considering 95,000 pound being the taxable total profit suggests that this is crossing the revised upper limit threshold, and hence we shall be paying corporation tax over the main rate. But see what exactly the requirement of the question is, that we need to calculate the corporation tax liability additional taxes value. I mean, we need to figure out the increase in the company's corporation tax liability, because if the company wouldn't have sold the asset, it is just the trading profit on which they had to pay off the taxes. But now their taxable total profit has been changed. So I'm just going to do the calculation once again. As the taxable total profit was 95,000 pound, on which corporation tax liability has just been shown. It is of 23,750, and this is the corporation tax liability which we have calculated by taking into account the chargeable gains in respect of disposal of this office building. So I'm just going to see that had there been no chargeable gains, had there been no chargeable gains, and in that case, well, there had been only the trading profit. So the taxable total profit will have been only 40,000 pounds, would mean that the company will then be falling in the marginal relief area, because the upper limit is of 62,500. And well, their corporation tax liability must have been much different, right? So the thing is, first of all, we shall be applying the main rate on 40,000. I will first be multiplying this value with 25%. So that would give rise to a tax figure of 40,000 into 25%, that will be equal to 10,000 pound. And again, against this figure, we will be deducting the marginal relief. And marginal relief is calculated by first picking up the upper limit. What the upper limit is, it is according to this 62,500 pounds less augmented profits, which is of 40,000 pounds. In this case, augmented profit and taxable total profits are same, into taxable total profits, which is of 40,000 pound over augmented profit, which is the same 40,000 pounds. So you could simply skip this numerator and denominator, into marginal relief fraction, which is 3 by 200. So I just need to see that what is like going to be the corporation tax liability had there been no chargeable gains implication. So in this case, our corporation tax figure will have been just 9662. So corporation tax liability would have been just 9662, but because of like disposing of the asset, now the corporation tax liability has been increased to 23,750. I need to figure out that what is like going to be the additional tax liability which Dibis Limited will have to bear because of the disposal of this office building. I'm just going to take the difference. 23,750 less 9662.5, that is of approximately 14,088 pounds. So this is like how we could determine that how much extra tax, incremental tax, the company will have to pay if they disposes of an asset and realizes a chargeable gain. And of course, as I have started making an explanation on the Word document, it will remain incomplete if I don't mention this thing. So the increase in corporation tax liability because of the disposal of office building will be of 14,088 pounds. And I'm just going to mention that in order to see that how I have calculated this addition, I am referring to working 2. So see spreadsheet for working 2. Clear? Is this thing clear to each and every one of you? And now there was a question asked previously that okay, where did we get this 40,000? Since they joined in March, aren't we supposed to apportion 40,000 in relation to DIBIS budgeted profits? See, every company is responsible to pay off their own corporation tax liability according to their own accounting period. So if you just have a look at the exhibit once again, see, Dibis Limited is gonna be making up their accounts for year ended 30th of June 2026, which means their accounting period will be starting from 1st of July 25 to till June 26. So this is like how their year is representing. Now in this year, there may be certain incidents happening with them. They might be joining some other group. They might be leaving the past group. They might be purchasing anything. They might be selling anything. And we are not going to apportioning the items on the basis of the events that happen alongside the year. I need to see what an accounting period is. It's of July 25 to June 26. And well, I need to figure out everything that Dibis Limited had generated, whether they were a part of Kuba Limited's group or they are a part of Dolma Limited group. So in the whole year, they had generated a profit of 40,000 pound, and this is the profit for complete year. But there could be a chance that maybe this is the profit which they generated in the initial months of the accounting period when they were a part of Dolma Limited group. And since they became part of Kuba Limited group, their profits are deteriorating, their performance is not going good, but it is not a profit on month by month basis that we need to consider for calculating corporation taxes. This is the profit. This is the total taxable profit that we need to pick up in respect of the whole year. And then when it comes to corporation tax computation, of course, for the period July 25 to June 26, the structure is like quite like this, that Kuba Limited is controlling shareholding in Pepsi Limited, and they are also controlling Dibis Limited, but they acquired the control on 1st of April, I believe, 1st of March. So they acquired the control on 1st of March 26. And before 1st of March, Dibit Limited was in a control of Dolma Limited. So if I just consider from Dibis point of view, in the first approximately 8 months, they were under the control of Dolma, and then in the next 4 months, they were under the control of Kuba, and with Kuba, they were already forming an associated group with Pepsi. So Dolma is to be included as an associated group member with respect to Dolma, with respect to Debis Limited. And alongside Kuba and Pepsi, for Debis, there are 4 companies in associated group. Though it is a kind of an unfair treatment, maybe I shouldn't call it as an unfair treatment, but a very unusual treatment for Debis Limited. But of course, we cannot ignore the importance of 8 months. If there happens to be any company which remains associated even for a certain period of time, had Dolma been an associated for just 2 months in the whole year, even then for the current period, they would have been treated as an associated group member. Is that clear? All right, so it is all done for question number 2, and I'll have to rush through question number 3. Again, with question 3, you have got this background. The name of the person is Esla. Kindly start reading the background information, and then I'll show you the exhibit. Let's have a look at the exhibit. And again, what I've told you people before, with question number 2 and question number 3, the exhibit and the requirements are separately placed. I believe that you must have gone through the entire question. Now, let's have a look at the requirement. It says that you should assume that today's date is 1st April 26 and explain with supporting calculations the additional income tax payable by ESLA for the tax year 25-26 as a result of receiving the redundancy package. Again, this is the additional amount that we need to calculate. See, if you can work through margins, if you can just easily extract the extra amount of tax, if you are so good at doing the calculations, then it's like perfect. Otherwise, you may do this thing that by not taking the relevant income into account, you calculate the tax liability. And then by picking up all the values in the calculation, you calculate the tax liability and then compare both, as how we did with the previous question of Dibis Limited. So this is how you may come to know about the incremental amount of taxes. And this part of the question is carrying 7 marks. I'm just going to take you to the exhibit. Could you see that what the statutory redundancy payment is? It is of £14,000, but I hope you remember that whenever the statutory redundancy payment is given, that is completely exempt. Though on the other hand, this would tend to reduce the ex gratia payment, as this non-contractual payment will fall in the ex gratia payment. So the exemption, this non-contractual payment is not going to be fully exempt. It is not going to enjoy the complete exemption of £30,000. Rather, the exemption limit is going to be changed because of the statutory redundancy payment already given. Okay, so this statutory redundancy payment is of £14,000, which is completely exempt, but this is going to change the exemption limit towards non-contractual payments, as non-contractual payments were made for worth £35,000, out of which now how much of the exemption is available against 30,000? 14,000 has already been consumed. Now we do have still £19,000 left, and it is like said to be a taxable amount in respect of this termination payment. This is like indicating towards the non-contractual payment, right? And now we have thoroughly used this limit of £30,000. Now the next thing is that as not just the statutory redundancy payment and the non-contractual payment is made to ESLA, she is given with the laptop computer as well. So I will be applying exactly the same rules as how we apply on employment income benefit calculation, that whensoever an asset is like gifted to someone, then what is like going to be the taxable value. But instead of like treating that taxable value as a part of normal employment income, we'll treat it as a part of their redundancy package. Okay, so what the information is that she was given with laptop computer back on 6th April 24 for use, having a cost of 1450. He used it, and then on 28th of February 26, she was given with the laptop computer. I mean, the ownership got transferred to her at the point when she was made redundant. Its value was £730. Okay, so I need to see that what is like going to happen in respect of the year in which she is leaving the organization. It is 28th of February 26, which is falling in the tax year 25-26. So 25-26 is basically the year in which she is going to leave the business. Though till 28th of February, she has used the laptop. This actually makes up 11 months in the year. So 11 months use of asset benefit is definitely required to be calculated, but this is to be taken in a normal scenario. I mean, when she was like simply using the asset when she was still an employee, and whatever the benefit she had to calculate, she will be assessed under employment income rules. So use of asset benefit for this tax year, for whatever the months she has used this asset, that will be included as a part of her employment income. But then she was made redundant. And by giving laptop at the point of making her redundant, indicating that this is a part of her redundancy package, then the gift of asset, the transfer of ownership of the asset benefit, though it is going to be calculated, but instead of being treated as a part of her employment income, it is called as a part of her redundancy package. So how we are going to calculate? We will be calculating it as a transfer of second hand asset. So I am going to see that what is going to be the market value of the asset at the point of transfer. See, when the asset's ownership was transferred, its market value was 730 pounds. And we need to compare market value when the asset was given to an employee for first time use, or precisely the cost, which is in this case it is of 1450 pounds. And then against this 1450, I need to see that how many benefits have already been assessed, as this asset was being used by ESLA as a normal thing before. By the time Before the time she left the organization, she was already using the asset. So I need to see that she was like granted with the use of asset right in the start of the tax year 24-25. The cost of the asset was 14450. 20% of that will be considered equivalent to 290 pounds. And then in the tax year 25-26, she used the asset till 28th of February 26. So it's like starting from 6th April 25 till February end. That means that she has made use of this asset for approximately 11 months. So 1450 being the cost into 20%, that makes up the benefit under use of asset. And this is to be apportioned over 11 months because she had used this asset while the ownership was lying with the employer. It will give rise to a taxable benefit of 266. And I was talking about this 266 before, that till the point she remained an employee, whatever her use of asset benefit is, that will be included as a part of her employment income. But now when she is being given with the ownership of the asset, it is not the normal transfer of asset. She is made redundant, and as a part of her redundancy package, she is given with the laptop computer. So though the calculation seems to be absolutely the same as how we calculate the benefit in respect of transfer of second hand asset, but the value will instead be taken up as a part of her redundancy package. So how many benefits she has already been assessed with? 290 and 266. So the remaining value will be of 894. And we all know that out of market value at the date of transfer and the other thing, we shall be picking up the higher of the two figures, which is in this case 894 pounds. So 894 pound is going to be the taxable benefit. Now, again, statutory redundancy payment is exempt. Non-contractual payment is like going to be partially covered with the exemption, but 19,000 pound is taxable. And in this case, with respect to the provision of the laptop, 894 is said to be the taxable value of the benefit. So altogether, what is going to be the total taxable amount for redundancy package? That's going to be of 19,894. This is like going to be the total taxable amount in respect of redundancy package. All right. So see, Esla being a higher rate taxpayer, it is mentioned over here because excluding her salary and this redundancy package, she was like receiving 85,000 pound, which clearly indicates that she is a higher rate taxpayer. And if there happens to be an incremental 19,894 to be included in her income tax computation, she will obviously be paying taxes further at the rate of 40%. But this is like going to have an impact on one thing. Can you identify this thing? See, she is already having 85,000 pounds, so she's already a high rate taxpayer. By having 19,894 additional, which is a part of her redundancy package, she will be paying 40% on it. Let me just tell you what is like, in fact, you should help me in letting me know that what is going to be 40% of this extra amount. 19,894 into 40%, that would lead to 7,958. So this is the additional tax they will be paying. But the answer is, thank you so much for helping me out. Yes, the answer is not yet complete, and you are correct about this, that they should point out the reduction in the personal allowance, because including this much amount in 85,000 pound would mean that their overall income will now be increased to 109894. And previously Esla was able to utilize the personal allowance completely, but because of like exceeding the threshold of 100,000 pound as her adjusted net income, she will now be facing a reduction in her personal allowance, because with every excess ANI of over and above 100,000 pound, half of the excess value will be used for reducing the personal allowance. And reducing the personal allowance would mean paying extra tax liability. So I'm just going to work on the margin. See, I did not calculate taxes by just picking up 85,000 pound first, and then by taking the total figure, doing the calculation, and then compare the both. Though I can do this, it will be marked. It will not let me lose any marks, but it is like going to take a lot of time. And if you have a good grip, then you may try doing this thing as well. Otherwise, you are totally welcome by doing this two calculations first, by considering that if there is like no such redundancy payment, then what had been the tax liability, then including the redundancy payment, reducing the uh, personal allowance figure, and then see what is going to be the tax liability, and then compare both of the figures to see that how much extra taxes she will be liable to pay. But here I'm working on the margins. Working on the margins would mean that I'm just going to explicitly picking up the extra values from the questions, only those areas which were the soft targeted areas. And I just need to see that what exactly the incremental tax will be due in each case. So as 109,894 is the ANI now, which is more than 100,000 pounds. So what is an extra figure? That is 9894. Half of this figure is equal to 4947, I believe. This is the value which Esla will lose. And by losing this value would mean that she will be paying taxes on this 4947. So 4947 will be taken out of personal allowance, will be withdrawn from the personal allowance. this will be letting her to increase her taxable income, and she would end up paying additional taxes at the rate of 40% because she is a high rate taxpayer. So how much of the extra tax she will be liable to pay because of losing this much amount of the personal allowance will be 1979 pounds. So what exactly the overall additional tax she will have to pay because of getting extra income, she will be paying taxes of 7958, and because of like exceeding the threshold of 100,000 pound, and hence her personal allowance is like going to be reduced. This would be like resulting into a further increase of 1979. So altogether, how much of the additional taxes she will be liable to pay? Take a total of the two figures, it will be equal to 9937. Thank you. So altogether, she will be liable to pay 9937 pounds. I'm just going to show you the standard solutions. Just quickly have a look at it, and then I'll take you to the next part. Once you are done reading this part of the question, please update me so that I may take you to the other requirement of the same question. All right. So the next requirement is that we need to explain with supporting calculations the reliefs available to ELSA in respect of the gain of the sale of the house and the loss on the gift of Rio Public Limited Company shares. And together this is of 8 marks. I'm just going to show you the standard solution right away, and we'll be explaining everything side by side because the time is already up and I know that it's like already 3 hours since we started. So exactly what the exhibit says in respect of the disposals, that she has sold her house to an unconnected third party, and as well as she has gifted 5,000 shares in Rio Public Limited Company to her son, Sil. So first of all, we need to consider the implication related to her house. The gain is already there. It is of 194,000 pound, but this was her main residence. And whensoever the main residence is sold, we need to see that if PPR, the principal private residence relief, is available, the private residence relief is dependent upon the number of months relevant to the period of occupation. See, it is Esla's only residence starting from the date when she purchased the house on 1st August 2012 till 31st January 26. And surprisingly and fortunately, they have calculated the months for you as well. This is like giving rise to a period of 162 months. So from the date of purchase till the date of disposal, she had lived in the property. So this was her period of occupation. But then what happens is that she let the top floor of her house, which is basically making up 35% of the total house, to tenants on 1st June 2013 to 31st of January 2026, which is like basically the period of 152 months. So what happens is that whensoever the owner is living in the house, the landlord is living in the house, and he is going to rent out a certain portion of the house to someone else, that period is though not eligible for PRR, the private residence relief, but this would then be qualifying for letting relief. So as out of 165, I'm just going to remove 152 months, as 152 is included in these 165 months, but 152 months is not something in which I would say that 100% of the house was let out. Otherwise, letting relief wouldn't be applied if this happens. See, 35% of the house was let out. That means 65% of the house was being used by the landlord of the house. And this is still to be treated as a part of period of occupation. This was a kind of a little bit tricky question. But could you see that the house was sold on 31st of January 26? And one thing we know, that 9 months before the date of disposal, whether you were living in the house, you were not living in the house, or in this situation, if you were partially living in the house and partially not, last 9 months prior to the date of disposal will be considered as a complete period of occupation by the person who used to own the asset. So in this case, what will we do, that out of, okay, this 165 does include 152 months in which some part of the property was let out. So it qualifies for letting relief instead of private residence relief. But 9 months will be treated as the period of occupation completely. So I'm removing 152 months, but in this 52 months, 9 months shouldn't have been removed. So this is like going to be added into it, or in simple words, 165 months is the complete period of, is the period in which the owner has occupied the property, out of which how many months do I need to remove? 152 minus 9, that makes up 143 months, right? So it is like up to you how you are going to present it. So 165 less 152 plus 9, because 152 is not thoroughly to be deducted. This 152 does contain 9 last months prior to the date of disposal, and they should be there to be treated as a complete period of occupation. So that is like going to make up almost 19 months in which I would say that the landlord had thoroughly occupied the property. And what about these last period? I mean, 152 minus 9, which I've told you, this is about 143 months, because 9 months are something which we have taken completely as a part of our period of occupation. For the remaining months, as 65% of the property was occupied by the landlord and 35% was let out. So 35% will qualify for letting relief, while 65% of this period will qualify for private residence relief, and that is equal to almost equivalent to 93 days. So we are basically, instead of taking 65% or 35%, I am just converting the days into a whole value relevant to the period of occupation, as if suggesting that this is exactly the period in which I consider as if the property was wholly and solely, totally owned by the landlord. So how many months does it give rise to? It is equal to 1 month, 2 months. So actually 100, is that 22? Sorry. I think I should, it was 162 months. It's 162 months. Sorry, I was like crunching 162 months on the calculator and wrote 165. So it's like 19 months and the rest is the same, right? So 162 months is the total period of ownership, out of which the status of 152 months was like quite different, because 35% of the property was let out, 65% of the property was still occupied by the owner, uh, from which 9 months are typically treated as 100%, the period in which the property was occupied, while the rest is to be split on the basis of the dominance by the landlord. And this is how we have given it a whole number of 112 months out of the total period, in which we assume that there had been a period of occupation. Okay, so what is like going to be the principal, the private residence relief? See, they have already calculated the gain figure. It is of 194,000 pound. So 194,000 into 112 by 162, because 162 is the total period of ownership. That gives rise to a figure of 134,123. Please recheck the values as well, if in case I'm just like, there could be a chance that I may make mistake while crunching the values on the calculator. This is the value which is going to be exempted under principal private residence relief. This is called PRR, the private residence relief, right? So the gain equivalent to 112 months, and that's of 134,123 pounds. This is gonna be exempted. ESLA will not be liable to pay tax at all, because this is like gonna be covered under private residence relief. Then what about 35% of 143 months? Because 143 months in which the property was let out, that did not qualify for private residence relief, but it will qualify for letting relief. For the sake of like calculating letting relief, see, we need to see three things. One is the standard amount, 40,000. Then we need to see that how much of the gain is already exempt under private residence relief, which I have calculated, 134,123. And we need to see that how much of the gain is relevant to the period in which the property is let out. So it's simply like the gain figure they have told you is 194,000. 30, could you please tell me 35% of 143 months? This is like 143 into 35. This is like almost equal to 50 months. So 50 months out of the total period of ownership, which is of 162, that actually is gonna telling us that how much of the gain is covered under private residence relief, and that is of 59877. Or the simplest most way is that you have already calculated the amount exempt under PRR, and the overall gain figure is 194,000. So the leftover gain is the gain which is related to the period in which there is a letting. So out of these three figures, the 40,000 pound, the gain value attributable to the period of letting, as well as the amount already exempt under private residence relief, I need to pick up the lowest most figure, which is in this case 40,000 pound. So 40,000 pound is all going to be exempted further under private residence relief. So Overall gain was 194,000, but first 134,123 will be deducted, and then 40,000 pound will be deducted. And whatever the value is gonna be left behind, ESLA will be paying off the taxes, right? But what exactly we had to do according to the requirement? We had to calculate the relief's value with respect to the sale of the house. We have calculated the private residence relief as well as a letting relief. And now we need to discuss the scenario with respect to the loss on the gift of Rio Public Limited Company shares. Okay, again, coming back to the exhibit, it is about 5,000 shares gifted in Rio Public Limited Company to Sil, who is Esla's son. It happened on 10th May 2015 for 52,000 pound, though on that day the market value was 8.1 to 8.5. This is like the highest market value and the lowest quoted price. So the thing is, the market value of the share is determined by taking the average of the two quoted prices, the highest and the lowest one, in order to determine the mid price, right? There is a question, how did they calculate the gain related to letting? Could you please show me the calculation? See, out this is not just 152 months. Out of 152, 9 months are completely treated as period of occupation. It is about 143 months in which there was a bifurcation of 65% and 35% being the period of occupation and the period of letting. 35% of 143 months is like almost equivalent to 50 months. So 50 months, this is how we have rounded off to the whole month calculation. Out of 162 months are considered to be like equivalent to the period of letting. And see what the gain is, the original gain figure. This is 194,000. That's how you come to know that how much of the gain is gonna be covered under letting relief. 50 by 162, the period of letting out of total ownership. That gives rise to letting relief, right? Okay. So see, first of all, I need to see that what is the market value of the share being gifted, because in case where there happens to be a transfer in between connected persons, then it is the market value which shall be treated as the disposal proceed. So the lowest market value is $8.1, and here we are going to apply the quarter up rule because this is no longer the unquoted companies. This is like a catch in the question. So the lowest quoted price plus we are going to add up the half of the difference in between the highest and the lowest quoted price. So whenever the shares out of the quoted companies are given, it is basically the lower quoted price plus the average of the highest and the quoted price and the lower quoted price is to be added up together in order to see what the market value of each share is. It is in this case 8.3 pound per share. And when it is like multiplied with the number of shares being gifted, it will give rise to a total market value of 41,500 pound. I mean, this is to be treated as disposal proceed, against which when we are going to deduct the cost, as you could see in the question, that the shareholding were acquired for 52,000 pound. Then after deducting the cost, we will give rise to a figure, which is a negative figure. And that's how we can say that the disposal has generated a loss of £10,500. And I hope you remember that whensoever the shares are sold for a loss, but the disposal has taken place in between the connected persons, that loss can only be adjusted with against the gains made in the same tax year as well as the future tax years against the gains which we are going to generate by making the transactions with the same connected person. So this loss is like not open for adjustment, rather there is a restriction. This is 41,500 being the disposal proceed, and disposal proceed is lower than the cost, and that's how there happens to be a loss. And it is mentioned over here that SIL is a connected person to ESLA, so the loss can only be relieved against the gains made on any other disposals to SIL by ESLA in the current or even in the future tax years. Right? Now we have the last thing in front of us, quickly covering it up. As in this case, the requirement C is applicable. Kindly have a look at requirement C. So here in this question, all right. See, it is like gonna be done in the same way. Either you are going to add the difference of the two extremes into the lower one, or you are just going to add up the two extremes and taking an average of it. Either way, you are going to get the same answer. So 8.1 plus 8.5 and taking an average of it, the average price is 8.3, or otherwise, you pick up the lower figure and then you are going to take the difference of higher and lower and take the half of that figure. Either way, you are going to get the same answer. So if you are okay with this thing that you are first picking up 8.1, adding 8.5, the total value will be 16.6. When you are going to divide it over two, I mean, taking the average of the two extremes, you will be getting exactly the same answer. So that's a catch. I'm so sorry. This is like 8.1 minus 8.5. 8.5 minus 8.1, 0.4 divided over 2. I mean, if you're going to take the difference of the two values, the average of the difference of the two values and add it into the lower value, that will be exactly the same if you add up the two extremes and take an average of it. This is the minus sign that they are, by the way, showing. 8.5 minus 8.1. Otherwise, the easiest most thing is that we say to the students that take up the two figures, 8.1 plus 8.5, and take an average of it. So this will be exactly equal to 8.3. But that's okay. Keep your life simple doing this thing. Okay, so quickly telling you that what is like going to be the NIC implication in respect of ESLA contributing into the share incentive plan. I mean, participating into the share incentive plan, which is SIP, a tax advantageous scheme. See, there is going to be no income tax as well as NIC. payable in respect of free shares when they are given to her, or even the dividend shares which are going to be purchased every year and then they are going to be reinvested into SIP. We know that these free shares and the dividend shares will definitely be withdrawn at the point when Esla will have to leave the company. And in case where the shares are going to be withdrawn within 5 years, then this would lead to an income tax liability as well as NIC to be paid by her. And even this would be creating an income tax implication, but no NIC will be reinvested. Rather, they are going to be withdrawn. They are going to be removed after 3 years. So considering this fact, you could see in the question that she's like probably leaving within 3 years after joining the plan. See, she joined it on 6th April 26 and will be leaving this employment on 31st of December 28, which would mean that she is like going to leave the organization within 3 years. So she will be at the point when she'll be withdrawing her shares as well as uh, leaving the company, of course. She will not just be liable to pay income tax or NIC, but removing the dividend from the plan, and that's so within 3 years, will lead to an income tax implication as well. Though they did ask only the explanation to be made, and see, even this calculation has never been asked even in the past. This is not something which we are supposed to know. We just need to know the implication. I mean, we just need to know the treatment. This calculation has never been tested and this is not going to be tested. That what is like going to be a very in-depth calculation of income taxes and NIC. Though a little bit of the calculation with respect to other share schemes can be asked, but with SIP, the things are like quite difficult, or I must say quite comprehensive, which is why they are not usually examined to the point where you'll have to show the calculation. It's merely the explanation which is must. Okay, and these are the tutorial notes. So this is like it. Okay, let me know that if you people have anything else to say in respect of today's session. If there's like anything else which is like still unaddressed, please let me know, or any queries which you want to get resolved, please drop your concerns in the dialog box. So the concerns are that do we have a document which consists of all the tax rules? For that, I'll be sharing the pocket notes because there's like no shortcut to the rules Um, the percentages, the values, and their interconnected rules, they all are important, but we have made a concise version of that, and I'll be sharing that with you people as a free resource, but I'll be sharing in your enrolled students group as well. Other than solving papers, what do you recommend before we do the mock exam? You'll have to revise the content and do as much practice as possible, and doing most of the practice on the computer, on either picking up simply the spreadsheet or the Word document, or you may simply log into practice platform where you may find the blank workspace, and this is like going to be a good way to do the practice. So but this is the only thing that you need to do. Usually the things which have been tested in the past keep on like repeating on its own. So yes, if you will enter the exam hall, you will find that there will be certain things which you have seen somewhere while doing your practice. All right, students, will be sharing the schedule with respect to other revision based classes with you people soon. And if in case you come across any problem related to any topic of advanced taxation, you are totally welcome to drop as many concerns as possible in your WhatsApp group, right? Wish you all the very best for your upcoming exam. And with that, I'm going to wind up the session. Thank you once again. Have a happy weekend. Goodbye.